The RBI's Monetary Policy Committee delivered a surprise. It did not hike, it paused. But it said it retains the stance as withdrawal of liquidity, which technically means more hikes can't be ruled out. Let's first hear out what the governor had to say on the matter.
If I have to characterize today's monetary policy in just one line, I would say as follows. It's a pause, not a pivot. Number two, there has been an effective rate increase of 290 basis points over the last 1 year. The MPC remains watchful and will not hesitate to take further action in its future meetings as may be necessary. So, the job is not yet finished.
Those are very important words. Okay, the policy and the statement throw up several questions. First, market was expecting a hike as the previous inflation number, February, surprised sharply on the upside. There are also real fears of milk inflation and probably weather shocks, but RBI paused. Why? Question two, policymakers usually pause their rate hike cycle if it hurts growth. Here, the Reserve Bank has upped the growth forecast. Question three, Reserve Bank paused apparently because the year-ahead inflation has now been brought down to 5.2% from 5.6 earlier. So now the positive real rate, that is the difference between interest rate and inflation, 6.5% minus 5.2 is 130 basis points. A 130 basis point real rate is a good reason to pause. The only problem here is the higher real rate is entirely because the February inflation surprised higher. So it's a base effect result. Okay, and finally, I mean, it doesn't look very convincing. Finally, the fourth question that is thrown up, and that's the most important one, Reserve Bank repeatedly said, and you heard the governor say this assessment is valid only for this policy and up to the next policy. So there is a chance it can hike going forward. That seemed to be one of the communications. But is that how the market interprets it? Is that how we ought to interpret it? To answer all these questions, I'm joined by an elite panel. B. Prasanna, the head of Treasury and Global Markets at ICICI Bank; Mridul Sagar, former member of the Monetary Policy Committee at Reserve Bank. He was executive director there. And Sabaran Chakrabarti, the chief economist at Citi India. In a bit, we have been joined by Mr. Dinesh Kumar Khara, the chairman of State Bank of India. Gentlemen, thank you very much for your time. Mridul, let me start with you. Puzzling policy, as I would say. Are you also puzzled by the decision? What were your takeaways?
I wouldn't say that I was puzzled. I mean, clearly RBI had two choices. The one which it chose. The other was to do a 25 bps and then wait for conditions to deteriorate and then act very with agility to sort of give support. But RBI clearly has chosen to sort of pause for this policy, not changing the stance. Maybe the communication part needs to be looked carefully. Governor repeatedly said it's a pause, not a pivot. But they will have to walk the talk if global conditions do not deteriorate. So that's not the baseline yet. So, but the lags in monetary policy transmission makes it very complicated.
A pause, not a pivot, means I am not cutting, I am pausing. But does it mean I can still hike? Would you take that away, Mridul?
Oh, yes, undoubtedly. I thought the communication was that this is not the end of the rate hike cycle. And look at the inflation. I mean, the inflation hasn't really come down in any decisive way as per the target. You have core inflation measures running at 6 or higher. In fact, most people look at exclusion-based measures, but if you look at the trim mean measures, the core inflation is running at 6.5%, 6.6 to be correct, precise on that. And that's not comfortable situation at all. And one shouldn't disrupt the monetary policy transmission in these circumstances, but clearly financial stability considerations forward over this.
So clearly monetary policy has bowed down to financial stability. not the pure Brahminical monetary policy targeting inflation. It has also bowed down to a reality. I just want to deviate from here and ask the bankers a question. Mr. Kharad, do you think that the fact that they have paused should be taken as another hike possible? The bond markets are indicating that, they're going to see it as peaked off. What is your own understanding? You think a hike can still come?
I think one of the very critical factor which RBI always keeps in mind is the deliberations in the MPC, and where the data relating to inflation is one of the very critical factor. So I think going by that and looking at the fact that it has been a unanimous decision, so it very clearly is a reflection that, of course, what you mentioned and what Governor also mentioned in terms of it's not a pivot, it's a pause. So they are very closely looking into these numbers, and based upon that, they probably felt that in the current scenario, perhaps it is better to pause and see to it how things really pan out. Having said that, we also have to keep in mind the likely trajectory of the inflation. And the CPI inflation, as it is projected to be around 5.2%.
Yeah.
So I think in the year 23-24, if at all those projections turns out to be the reality, perhaps, we would be in a much better position. But of course, we'll have to probably wait and watch for how the Rabi crops will be. And based upon that, the final outcome will be known. So maybe I think the trends were not very clearly discernible. So that is the reason why RBI has thought in terms of pause. And once the trends becomes discernible, then perhaps there could be some long-term trends which can be seen. This is how I read the situation.
Okay, but Prasanna, would you agree? Both you and I want your reaction. The bond market reaction appears to be a long pause, not a hike.
So, Lata, I think going into the policy, the expectations were equally split initially, at least between a hawkish pause and a dovish hike. And I think what RBI wanted to deliver was a hawkish pause. And the words spoken by the governor seem to clearly indicate that he didn't want the market to run away with expectations that this is a peak in rate cycle. He is just pausing temporarily, and that's why some of the words that he said that you had repeated at the beginning of the program.
But the markets didn't react that way.
Yes. So I think what the market is now interpreting it is to say that if you had to increase interest rates, April was the best time in the next 3 or 4 months that you could have increased. You're going to see inflation coming down into the 5% handle over the next 3-4 months. And so I think the interpretation from the market at this point of time is that, okay, you have not hiked now, you're at 6.5%. And going forward, inflation projections are coming down, and you're clearly at 130 basis point real rates. The only reason the market thinks that they will possibly hike is either Fed acts and hikes much more than what is expected at this point of time, or if there is a currency instability angle for the INR, which also doesn't seem likely at this point of time. But if it were to come, so these were the two things. I think the market thinks that the RBI will have to hike going forward. Otherwise, just based on inflation and inflation projection, it's going to be difficult for RBI to justify a hike going forward.
Absolutely. If you don't hike when the last reading is 6.4, why should you hike when the last reading is 5.2? Point taken. Samiran, if you want to comment on the rate trajectory going forward, I'll twist the question to you. Should we now expect a cut? Because at the moment, the positive real rate is 130 basis points. Now, if you go by the MPR, they are saying it is going to become 4.7 to 4.4 year ahead, FY25 numbers. So then the real rate becomes 200 basis points. Logically, therefore, second half should be a cut, isn't it?
So, Lata, the way to think about it and where the confusion is why hawkish pause from RBI has been treated as a dovish pause by the markets is that there is significant difference of opinion about what is the inflation rate RBI is trying to achieve. The market seems to be of the view that any number closer to 5% on inflation is good enough. It's within the comfort zone on RBI, and that's okay. whereas the flexible inflation targeting framework, the medium-term target is 4%. And today, there was, apart from some strong communication, it was not very explicit that whether future monetary policy actions will try to drive inflation towards that 4% mark. Because if you believe in getting to 4%, then the real interest rate needs to be significantly higher than what a neutral rate is. And from that perspective, there is no need for a rate cut anytime soon when inflation forecasts are all closer to 5% over the next year and even 4.5% by RBI's measure for next year as well. So in my view, it's an asymmetric risk. So a rate hike possibility will arise if inflation surprises on the upside in a big way, and a rate cut possibility will arise only if growth surprises on the downside in a big way.
Okay, so an extended pause is what you would go with. Okay, let me just come back to the real world for a minute. Mr. Khara, if the markets are clearly interpreted the way Samiran is looking at it, long pause. If that is the case, then is business inspired to invest more? Or are even retail borrowers likely to borrow more? Can we see this as a growth stimulus? Because you now know the downside. This is my EMI. It doesn't get worse than that. Does this usually trigger growth, borrowing, loans?
Well, we have seen even in last financial year also, despite the fact that the interest rates were rising, we have seen a very healthy growth in the loan book of the banking system. So I think I would say that the deciding factor for the private corporate and also perhaps for the borrowers, retail borrowers, is something which is not as much influenced by the interest, but more influenced by the opportunities which unfold. And if at all they can reap the benefit of those opportunities, people are willing to go ahead. Though last year, interest rates kept on going up, but mortgage loans, you would have observed that it was a very, very competitive market scenario, even for the retail loans and also mortgage loans. And that's why perhaps the interest rates have not moved up as much for both these segments. And that, I think, is going to be a guiding factor. Interest rate is one major component, but not the only component which influences the decision.
Fair enough, fair enough. So let me quickly get from the economists their growth forecast as well. Anything convincing you, Mridul, that growth will be 6.5? That's not the base case when I poll economists.
So I think there's a half percentage point downside to the RBI prediction. But I will add one very clear thing on this. I'm not worried if the growth falls to 6% in this fiscal, given the conditions they are. Okay. I think what we are missing, I'm now an academic, I must sort of, I teach macroeconomics at Kozhikode, and this is what I tell my students. Actually, your potential has fallen, and it's not really the case to say that we want 7 to 8% wishful thinking growth, and it will be wrong to set the policy on that basis.
Okay. Samiran, your estimate, do you think there is an upside surprise to your own growth forecast, and what is it?
So right now we are working with a 5.9% GDP growth for FY24. I think there could be downside surprises to RBI's forecast of 6.5%, but that in turn could make any future rate hikes more and more difficult because inflation then will have to surprise big time on the upside for RBI to justify why they're hiking at a time when growth estimates are lowered. So in my view, the real challenge is that while RBI in the press conference has been talking about some interest rate sensitive sectors showing signs of slowdown, I don't think that sort of a thing has been fully baked into the growth forecasts as yet.
Okay, fair enough. That's the intellectual discussion on what can happen to rates. We have to take a break. There were several other decisions also announced in terms of the non-deliverable forwards, a derivative instrument which will be available to domestic people as well. And then, of course, the very interesting loans that can be taken on your UPI account. Those discussions as well after the break.